We think the valuation is closer to $200.
And you've always thought that, though?
Yes.
Okay.
Yes.
I just want to clarify that this is not a shift in terms of your thinking from last week to this week.
No, we've had 5 concerns on the fundamentals. Very quickly, we've had gross margin concerns going into 2019. We don't think they're going to make profit on the $35,000 car. The battery packs are too expensive. Number 2, we don't know what the true level of demand is for the Model 3. Okay. They've been selling high-end vehicles, and we think the capital structure is unsustainable.
What do you think about the legal liability here? Explain it. The question of they're going to be meeting with the SEC. What kind of liability they have from the SEC? What kind of just legal costs of lawyers? There's about 3 or 4 class action lawsuits that have now been filed, some of which seem to be worth at least several $100 million, if not more. How does that play into any of your calculus?
It doesn't, in my view, because I'm not a legal expert. What it does, though, it provides an overhang around the stock. And what you don't want to have is uncertainty around the management, uncertainty around the legal implications of his tweet. It causes more and more confusion. So that, to me, it shifts the sentiment. If the sentiment starts to get negative from the big holders, it causes problems.
Would it change your view if they hired someone they call the COO or the president, or maybe even give a CEO title? Would that change the dynamic for you at all?
It depends on who. It depends on what the his role will be. We've had a lot of people exit out of Tesla. Over the past several years, we had a lot of people from Intel who have left, Apple who have left, et cetera, former employees of those companies. So, I think the other issue is that how he manages the street is equally as important as how he runs a company. In a publicly traded company, a CEO has to manage expectations. You have to communicate targets that are reasonable.
What is one of the things we've talked about is this idea that he believes, or we think he believes, that at least half or 2/3 of the investors will effectively roll their shares into a private transaction. By the way, we should say he owns 20% of the company, so he would be part of that.
No, that would be in addition, too.
Oh, so he believes, you think that...
That's why I think I'm very skeptical of it, because if you read his blog carefully, his updated blog, he says that his best estimate, by his quotes, is that 2/3 of the existing shareholders would roll over. That also implies, then, that he owns 20%, Tencent owns 5%. So that implies that he only has to finance 9% of the shares outstanding, and the raise would be maybe $9 billion or $10 billion. In my view, that's highly unrealistic.
Not to mention, what would you do with more than 5,000 small investors in this? I mean, they haven't explained how they get around the rules for that. And my other question is, just from Tesla's own filings, you can see that he has borrowed against a big chunk, maybe I think it's 760, or it's somewhere between $700 and $750 million that he's borrowed against on his holdings on this. If that stock falls, I don't remember if it was $218 or $217, then he could have a margin call that comes due. What happens in that scenario? The company itself says that could put further pressure on the shares. Yeah, I mean, that's a potential issue. The other issue we talked about before is that his convertible note is due March of 2019. The conversion price is $359, a little over that. So the stock price has to be above $359. If it's not above $359, then he owes $920 million in cash. He can't convert that debt to equity. So that puts even more pressure on his operating cash flow. He has long-term debt of $9.5 billion. He only has cash of $2.4 billion. 50% of the cash is comprised of customer deposits, people putting $1,000 down for a reservation, plus restricted cash. So it's not cash. A lot of it is held up in restrictions. He has current liabilities of $9.1 billion, and he has current assets of $6.7 billion. So he has accounts payable, accrued expenses that are due. So, and he's burning through free cash flow currently. So we've been cautious on the capital structure for quite some time.
We were talking earlier, Becky raised the point, the margin calls, he lives off of loans, off of his own stock. Around what we think about $217 or $218 is where the first call would be. Do you believe he has cash somewhere else that he has either through SpaceX now or through something else that we haven't thought about?
Did you see the quote now, Sorkin?
What's that?
Down 5%, not 2 anymore. So we're now under 290 on it. So
yeah, I have no idea whether he has cash to fund his margin call. I've not kind of looked into that at all. What I'm looking at is the profitability on a sustainable basis on the Model 3 as we go into 2019. That's my main concern. I think they've been selling a lot of high-end vehicles over the last couple of months. These are $65,000 vehicles, and the margins are pretty high. But once he depletes the backlog of high-end vehicles, what is the percentage of the net reservations that are folks that wanted a $35,000 car or $40,000 car? His whole strategy is to go into the mass market. This is what's driven the stock price up over the last year or so. People have been on the wait list for over 2 years. And I think a large percentage of those people have the intention of getting a $35,000 car.
Right.
Also, you have a $7,500 credit that is going to be reduced in half starting in January and then goes away. So if you buy a $35,000 vehicle, you can offset that with the $7,500 ZEV tax credit, basically, because it's an EV car. That credit goes away. They've already reached 200,000 vehicles. So
I got it.
I think there's issues with margin. I think there's issues with profitability going forward.